How to backtest using FXCM data. Backtesting is an essential process for traders who want to evaluate the performance of a trading strategy before risking real money. Using FXCM data, you can simulate past market conditions and see how your strategy would have performed. Here's a step-by-step guide to get started. Step 1. Access historical data. FXCM offers quality historical price data for various instruments such as forex, indices, and commodities. To access it, you can use FXCM's Historical Data Downloader or their REST API. The data typically includes open, high, low, close OHLC prices and volume information. Choose the time frame that aligns with your trading style: daily, hourly, or minute-based data. Step 2. Prepare your data. Once downloaded, clean your data by checking for missing values or gaps. This step is critical because inaccurate data can lead to misleading backtest results. Save it in a format compatible with your backtesting software, such as CSV or JSON. Step 3. Choose a backtesting platform. You can backtest strategies using platforms like MetaTrader 4/5, TradingView, or programming languages like Python. If you're coding, FXCM's API integrates well with Python's backtesting libraries such as Backtrader or Zipline. Step 4. Define your strategy. Clearly outline your entry and exit rules. For example, you might use a moving average crossover, RSI divergence, or a breakout strategy. Be precise to avoid subjective decisions during backtesting. Step 5. Run the backtest import your FXCM data into the backtesting tool and apply your strategy. The software will simulate trades based on historical conditions. Pay attention to metrics like profit factor, win rate, maximum drawdown, and Sharpe ratio. Step 6. Analyze the results. Review the performance to identify strengths and weaknesses. A good backtest doesn't guarantee future success, but it helps refine your approach. If results are poor, adjust parameters and retest. Final tip. Avoid overfitting. Designing a strategy that performs perfectly in past data, but fails in live markets. Always validate your backtested strategy with forward testing on a demo account. Backtesting with FXCM data can give you confidence, structure, and insights, turning raw ideas into actionable trading systems.